Alright, hello and welcome to Camel Finance. I'm your boy Camel, and in today's episode, is it possible that this melt-up thesis of mine, is this back on the table? Okay, is this possible, or is this going to turn out to be a fake out where we have to come down and make a new set of lows, or perhaps an equal set of lows? Going to discuss all of that. I'm going to got some really interesting developments in the charts to show you. Going to talk a little bit about the catalyst for the move in the stock market on Friday and live positions, TA, and all of the usual stuff there. This is the FTSE 100. A new 52-week high was printed on Friday. Coupled with the action in the stock market in the US equities, I said, could this melt up be back on? Here you can see the FTSE 100 position that I've had open live on the channel is now breaking out to new highs. So this does not speak to bear market rally. How can you have a bear market rally that prints a new 52-week high? If you've been on the channel before, you'll know this was the original thesis, okay? Once we broke down from here, I got quite a few people come out and start name calling and ha told you so, you know, all of that stuff. But I have since said, do we need to move the goalposts on this slightly? Do we need to have a look that looks something like this? I also said I don't like moving the goalposts, but at the end of the day, I have nothing to do with the price. All I can do as a trader is look at the price and trade it objectively. So I've said this before, I'll say it again. The cycle count, which I'll get to in just a moment, suggests that we have to come down lower. I have an alternate count that I will show you, which doesn't necessarily agree with this. But as I've said over and over again, if you're a bear and we do not come down and at least test these lows or preferably take them out, then what is your narrative? Where is your case for being a bear if this ends up resolving to the upside? There's still a lot of work to do, but assuming this continues to trend higher, then all of the bears were actually wrong. They were completely wrong. These formed the ultimate lows of the bear market, and this melt-up thesis is completely back in play. As ever, one day at a time, but as of Friday's close, this is starting to look increasingly more constructive. The reason behind this move on Friday was the ISM Services PMI just came in at 49.6, where it was at 56.5 before. The economy is weakening significantly. The bond market knows this. As I've been showing you on this channel, the bond market has been calling a Fed bluff since the Fed funds rate moved above the 2-year yield. Whenever this has happened historically, the Fed has paused rates for a short while before then moving to a cutting cycle. So the bond market knows it's time to loosen, and inflation is in the rear view. Yields are coming off. Again, bond market calling the Fed bluff. The Fed will either go 25 basis points or pause in Feb, I think, according to Miles. Risk assets will fly. And of course, if you've seen this channel before, you'll know we nailed the 50 basis point call. We are looking for 25 basis points and a pause at the February meeting. Can we get it? That, of course, remains to be seen. But if we do, particularly if we get this coupled with this ending up not forming a new low below these lows, then I think the bears are completely wrecked. That chart, what I've been showing on this channel for a long time, where we have record amounts of puts, record amounts of retail betting on more downside. I've been saying for a long time, retail never gets it right. There's never been a crash in history where retail was on the right side of the trade. Everyone that is currently short is retail. We're looking at around an 80% bearish distribution with only 20% of the market participants bullish. And as such, it is reasonable to expect those shorts will get scorched. Again, we have a lot of work to do, and I'll get to some cycle charts in a minute and show you that this could really go either way. But remember, if this continues to move to the upside and you're a bear, then you have to be willing to pivot if the market tells you so. The Fed made a turn in December and is now letting up even further. CPI could adjust further, and it could. I think we'll see CPI lower, and I think this is a trend that will continue. All the data that I've been showing on the channel over the past couple of months is pointing to that. The M2 supply at the lowest it's been for some time. Expectations are for a 25 basis point hike in February. A month ago, expectations were 50 basis point hike. The verbal tightening continues to be a major policy tool in play, but watch what they do, not what they say. So you can see here the market is pricing a 73% chance of a 25 basis point hike. And as I've said before, 25 and a pause is what the bond market is indicating. There are still plenty of reasons to be bearish. Things like this: BlackRock's UK property fund has delayed withdrawals again as investors such as pension funds seek to raise cash. There's always reasons to be bearish, and I'm not saying we cannot resolve to the downside. I'm simply saying I have flipped from neutral to marginally bullish after Friday's close, and I will show you why in the charts. So I was thinking that since we were starting to break higher, we were likely going to get this counter trend bounce from the dollar. This has been strongly rejected on the data that came out earlier on Friday. That doesn't mean that this could not resolve to the upside for a while. It doesn't mean we couldn't get a counter trend bounce. But remember, if the dollar continues to come off along with yields, risk will come on strongly. Speaking of the yields, look at this. This is the government 2-year yield. big red candle. Is this calling the Fed bluff? Moving significantly below the Fed funds rate now, particularly if they had to hike another 25 basis points at the next meeting. As I said, the bond market is calling a Fed bluff and does not believe there are more hikes to come. The US 10-year yield, the chart of truth, look at this strong rejection at resistance, now a big red candle down. This speaks to risk on, not risk off. Gold continues to push higher, as do the miners, as you can see, senior and junior miners. Silver's a difficult one. So I said, don't get shaken out on this, and then seemingly got shaken out on the breakdown of this trend line. But as you know, especially if you've been watching the channel, my goal is to remain as transparent and to uphold a higher standard of trading and YouTube influencers on this platform. I will show you every mistake I make. I will show you every stop out. I will show you every loss I take, as well as every time I take profit. I took profit on this trade. I said that I had to respect the risk. There's still nothing to say that we couldn't roll over and get rejected and come down, in which case I will look like a market wizard. If, however, we continue to trade up here and then break out, as I said before, I will look to re-enter to the long side. Moving back to this melt-up thesis, okay? This is the FTSE 100. Look at all-time highs breaking out. Where is your bearish argument here? How can you be bearish at new highs? The VIX, not speaking to a volatility event, not speaking to a plunge. In fact, quite the opposite. Looks like I'm going to have to pay the stop on this, but that's okay. That is what insurance is for. You don't insure your car and then hope you crash so you can claim on the insurance. Let's jump into the Dow. This was a massive 700-point move from the Dow. Again, it does not mean that this could not get reversed sharply and end up looking like this. But what this does mean is we consolidated in this range for a while. Whilst I was expecting it to break down because of the cycle count in the S&P, which I'll show you in a minute, the market has told me something different. This is what it means to be a trader. I can have expectations, but I cannot have bias. When the market breaks to the upside and clears all of these highs, I have to respect that. So for now, breakout, retest, consolidation, and looking for a resumption, I remain long, I remain strong. The Nasdaq refuses to put in new lows. So is there some form of silver lining? I'm not really interested in the Nasdaq until we get back above this neutral green line, and particularly if we were to break out of this massive downward sloping red resistance line, that will become a long position for me. So I'm happy to call that out on the channel right now. I will leave this here to let you know I am lining this trade up. If, of course, we break out of this red trend line, then this will become a long from me. So I'm calling this weeks in advance, possibly at least days in advance. In the meantime, I will be keeping an eye on this to see what develops from the Nasdaq. Hopping into the S&P, this is where things start to get both interesting and confusing. So the original count, which is shown by these green arrows, was what I was expecting all along. However, then Bob Lucas put the blue count in, and I said maybe this makes more sense. Maybe if we forced the end of a bear market, then we will have this early 30 or 27-day low. Now, I really did not like this because 27 is no way near the threshold of 38 to 42 days. So originally, this was my count in green, a perfect 42-day cycle. I ended up taking a long here and getting out on a breakdown here. So I've since put these green arrows back in, and I wonder, have we now had another 40-day cycle low or 38-day cycle in this neighborhood? And does that mean we now have another 40 days ahead of us moving up to this green arrow? So I've got a clip here to show you really quickly where I outlined one scenario that seemingly Bob Lucas was not considering. One thing I was thinking when I saw this from Bob was I was wondering why he seemingly has ruled out the notion that this could be a half cycle low. So of course the dominant trend is down. We've got lower high, lower high, lower high, lower high. So therefore it's kind of reasonable to expect that we would have to complete this weekly cycle low by progressing further to the downside. But I do also think, and I was thinking to myself, there's a chance that this is going to form a half cycle low, and then we could pop up here and drop into a weekly cycle low much higher up. So there you have it. Is this a possibility? Is this what we're about to see? Are we about to get a bounce out of this for a half cycle low, drop down into here, and then go full melt up, full bore, bullish look like this? Everything is on the table. This could easily get rejected. I've definitely outlined this as a scenario before where we could come up here and get rejected and then drop down into that cycle low and go. So absolutely anything and everything is on the table. But I can tell you for sure right now, we break out of this blue trend line here. We break out of this blue downward sloping resistance line that I've got drawn on here. Then expect me to tell you that we're going long. Expect me to respect the breakout and be targeting new highs. Like I said, the Dow and the UKX are apparently leading. There are other markets that I don't really trade that are also leading. Things like the Nifty 50, for example, in India. So anything can and will happen. It's a market. But remember, if we get a breakout of this blue trend line, that has to be respected. And likely, that means I will abandon these blue counts here. And we will look to see if we can get a full cycle ahead of us before dropping into this weekly cycle low, which would actually form higher than the prior lows. This would also be strongly confirming this melt-up thesis. This would be back on. And this is the importance of having absolutely no emotions in the markets. Remember the people that were going out and calling names and whatever else. There's no space for your emotions, okay? Zero emotions in the market. You trade what's in front of you. And what's in front of us right now, it doesn't make sense. Like I said, the count that we had before, this made perfect sense. This made perfect sense. We had a failed cycle. That was our exit for the trade. We had to look to come down and make a new cycle low. But we haven't done that. At the moment, we are resolving to the upside. Again, doesn't mean we could not trap here and then come down. Either way, we'll learn something over the coming days. But for now, things are looking constructive. This is a big move back above the break even. As you can see, this speaks to breakout retest. I mean, look at the amount of consolidation here. If this was going to be a bear flag breakdown, wouldn't it have done it now? It seems weird to me that it could just roll over. It doesn't mean it can't, but the price action is telling us we have broken above all of these highs and therefore should expect more upside. The FTSE 100, again, is also telling us the exact same story. This is looking for a run into the 8,500 plus neighborhood, in my opinion. So the last couple of things I want to point out. Riot, look at Riot go, okay? Breakout, little bit of a retest, looking for a resumption. So again, I don't like to take on weekend risk. I don't like to open new positions on a Friday. We'll see what happens on Monday. But for now, this is looking to be a long from me somewhere in this neighborhood. It will probably look something like this. If you wanted to play the safer option, then you could trade the breakout of the purple line, but you will have to tolerate a wider stop and therefore a smaller position size. And then lastly, Bitcoin, still refusing to drop into this cycle low. So can it get to Tuesday and trade above 17K as per Bob Lucas's call, as per my call a few days ago? Can this happen? Can we get a scenario where we just slowly grind up here, break out here? That's where the long comes from. And then we start a big multi-week rally for Bitcoin. Things change very quickly in the markets. You must be fluid. You must be adaptable. You must be unbiased. You must be unemotional. If you can achieve those four things, you can certainly achieve profitability and success in these markets. I certainly think there's some interesting developments. We need to be a bit more patient, wait for the trades to come to us. I'm not trying to force anything, but particularly if we can get some breakouts over the coming weeks, then 2023 is going to shape up to be an incredibly profitable year. If you found value here today, I'd appreciate it if you could drop a like on the video, subscribe if you're not already, and turn those notifications on if you want to continue to get updated as I modify my positions, as I make changes, as I get stopped out, all of that good stuff. Throw down in the comments if you have anything to say or anything you want me to cover. In the meantime, all the best from me. Take care. Cheers.